Hold on to your floppy disks, folks, because the US government might be entering the complex world of Bitcoin. The concept of a federal Bitcoin reserve, once a fringe idea, is now being seriously considered in the corridors of power in Washington. Picture a digital Fort Knox, but instead of gold bars, it's filled with lines of code that could either stabilize the economy or lead to significant risks. The premise is straightforward. The US government purchases a substantial amount of Bitcoin, secures it in a digital vault, and hopes for its value to increase. However, as with most initiatives, the devil is in the details. How much Bitcoin are we considering? And where do we securely store it to protect against cyber threats? Most importantly, will this strategy enhance America's financial future? Or will it leave us vulnerable? Prepare yourselves because we're about to delve into the intricate world of a federal Bitcoin reserve. We'll explore the arguments for and against this bold idea, analyze the potential impact on the US dollar, and try to understand why some politicians are enthusiastic about Bitcoin, while others are more cautious about this digital currency. The US government is considering purchasing Bitcoin, a significant amount of Bitcoin. But how does one go about acquiring a nation's worth of digital currency? It's not as simple as using a Bitcoin ATM to withdraw enough to cover the national debt. One approach is to utilize existing government holdings. The federal government has been seizing Bitcoin from criminal activities, amassing a considerable amount. This confiscated Bitcoin could be a starting point for the government's digital reserves. Another idea is to tap into the Federal Reserve's surplus funds. Think of it as finding a forgotten $20 bill in your winter coat, but on a much larger scale. There's also a proposal to revalue America's gold certificates to reflect current market prices. This bold move could potentially free up substantial funds for Bitcoin purchases. However, acquiring such a large amount of Bitcoin would be highly noticeable, akin to sneaking a family-sized bag of chips into a movie theater. The volume of these purchases could drive up Bitcoin's price, making it more expensive for the government to build its reserves. In the unpredictable world of cryptocurrency, it's challenging to determine the right time to buy or sell. Imagine the government successfully amassing a significant reserve of Bitcoin. The next challenge is ensuring its security. In the digital realm, the threat isn't from physical intruders, but from hackers who can siphon off assets with just a few keystrokes. This is where a highly secure cryptocurrency wallet comes into play. Picture a virtual vault, protected not by guards, but by sophisticated algorithms and multiple layers of encryption. Even the most adept cybercriminal would need a supercomputer and a lifetime supply of energy drinks to make any headway. However, no fortress is completely invulnerable. Consider the risks of software glitches, power outages, or even a rogue employee with a penchant for risky investments. The responsibility for protecting America's digital wealth would likely rest with the Treasury Department, collaborating with a team of cybersecurity experts who probably haven't had a good night's sleep since the days of dial-up internet. It's a high-stakes game of digital cat and mouse with the financial future of the United States hanging in the balance. Advocates for a federal Bitcoin reserve argue that it's not merely about digital accumulation, it's about safeguarding America's economic future. They assert that Bitcoin is the ultimate hedge against inflation, a digital lifeline in a sea of depreciating dollars. Envision a world where your money actually appreciates over time rather than slowly eroding like a melting ice cube. And then there's the national debt, that ever-present specter that haunts economists' dreams. What if, they propose, the government could use its Bitcoin reserves to chip away at the debt, like a digital pickaxe slowly reducing a mountain of IOUs? It sounds almost too good to be true. And that's because, well, it probably is. The reality is, Bitcoin is notoriously volatile. Its value can swing dramatically within hours, driven by speculation, market manipulation, and the occasional tweet from Elon Musk. Investing in Bitcoin is not for the faint-hearted. It's a high-risk, high-reward scenario, and it's not exactly the kind of gamble you'd expect from a government known for its cautious approach to financial matters. But hey, stranger things have happened. Despite the inherent risks, the concept of a federal Bitcoin reserve has garnered a notable following. Advocates argue that in an era increasingly driven by technology, it's high time for the government to embrace the future of finance. They highlight Bitcoin's decentralized nature, suggesting it serves as a hedge against government overreach and monetary manipulation. And let's be honest, who doesn't love a good hedge? In a world where central banks can print money at will, Bitcoin stands out as a form of money that is genuinely scarce and beyond the control of any single entity. Proponents also emphasize Bitcoin's potential to streamline cross-border payments and reduce reliance on traditional financial institutions. Because who needs those pesky bank fees, right? Imagine a world where you could send money to anyone, anywhere, instantly, and for a fraction of the cost of traditional wire transfers. Sounds like a dream come true, doesn't it? For Bitcoin enthusiasts, the potential benefits far outweigh the risks. They envision a future where Bitcoin is not merely a speculative asset, but a cornerstone of the global financial system. And who knows, maybe even your grandma will be in on it. On the other side of the digital divide stand the Bitcoin bears, a cautious and skeptical group. They view the idea of a federal Bitcoin reserve with the same enthusiasm as a root canal. Not exactly a ringing endorsement, their primary concern is Bitcoin's notorious volatility, arguing that it's simply too risky for a government to invest taxpayer money in such a speculative asset. They warn that a sudden drop in Bitcoin's value could wipe out billions of dollars in government holdings, leaving taxpayers to shoulder the losses. Not exactly a vote winner. They also raise concerns about Bitcoin's environmental impact. The process of mining Bitcoin requires massive amounts of energy, contributing to greenhouse gas emissions and exacerbating climate change. Not exactly eco-friendly. And then there's the issue of security. While Bitcoin itself is incredibly secure, the exchanges and wallets where it is stored are vulnerable to hacking and theft. A single successful attack on a government-held Bitcoin wallet could have catastrophic consequences. For Bitcoin bears, the risks are simply too great. They believe that the government should focus on supporting stable and regulated forms of currency rather than gambling with taxpayers' money on the latest Silicon Valley fad. After all, it's not a game of dice. The debate over a federal Bitcoin reserve has sharply divided Washington as expected. On one side, tech-savvy progressives view Bitcoin as a revolutionary tool for financial inclusion and a way to challenge Wall Street's dominance. And let's be honest, who doesn't love a good challenge? They argue that establishing a Bitcoin reserve would demonstrate that the United States is serious about embracing the future of finance and positioning itself as a leader in the digital economy. On the other side, fiscal conservatives view Bitcoin with deep suspicion. They probably still think it's some kind of magic internet money. They worry about potential government waste and abuse, and they're not convinced that Bitcoin is a safe or reliable store of value. Adding fuel to the fire is the recent surge in Bitcoin's price, which has caught the attention of both supporters and detractors. It's like watching a soap opera, but with more numbers. Bitcoin bulls see this as a sign that the digital currency is here to stay, while bears believe it's a speculative bubble that's about to burst. The political battle over Bitcoin is just getting started, and it's likely to be a long and contentious one. Buckle up, folks. The rise of Bitcoin has raised a fundamental question about the future of money. Will digital currencies eventually replace traditional fiat currencies like the United States dollar? Some experts believe that Bitcoin could eventually challenge the dollar's dominance as the world's reserve currency. They argue that Bitcoin's decentralized nature, limited supply and global reach make it a more attractive alternative to the dollar, which is subject to inflation and government manipulation. Others are more skeptical, arguing that Bitcoin is simply too volatile and impractical to ever replace the dollar as a global reserve currency. They point to the fact that Bitcoin is not widely accepted as a form of payment, and that its value fluctuates too much to be a reliable store of value. The truth is, it's still too early to say what impact Bitcoin will have on the dollar's long-term prospects. But one thing is for sure. The rise of digital currencies is forcing a conversation about the future of money and the role of governments in the global financial system. And let's be honest, who doesn't love a good financial debate? While the federal government wrestles with the concept of a Bitcoin reserve, several states have decided to take the bull by the horns, enacting their own policies related to digital currencies. Some states, like Wyoming and Colorado, have passed legislation that is friendly to cryptocurrency businesses, creating a more welcoming environment for innovation and investment in the digital asset space. It's like a digital gold rush out there. Other states, like New York, have taken a more cautious approach, implementing strict regulations on cryptocurrency businesses in an effort to protect consumers and prevent fraud. Because, nobody likes getting scammed. This patchwork of state-level policies has created a complex and often confusing landscape for cryptocurrency businesses and investors. It remains to be seen whether the federal government will eventually step in to create a more uniform regulatory framework for cryptocurrencies or whether states will continue to chart their own course. Either way, it's going to be an interesting ride.